Ladies and gentlemen, good afternoon, and thank you for being here. My name is Nathan Atkins. It's my pleasure to serve as president of the Duke Bar Association this year, and an even greater pleasure to have back at Duke Mr. Gao. Thank you so much for being here. And Professor Baxter, thank you for moderating this fantastic discussion. Thank you.
And thank you for setting this up. It is always a pleasure, a privilege, and an honor to welcome you back, Xiqing. Professor Gao is, I'm going to call him professor because he is also a professor and actually really a professor of Duke Law School too. He in many ways needs no introduction. Everybody knows who he is, but I can't resist running through just the highlights of a career that is just truly spectacular. If any of you were at the Duke Law graduation ceremony last year, you will know the stunning fact that Professor Gao has worked his way up all the way from being a manual laborer on the railroad to some of the highest corporate positions and government positions in the world. He is a major banker and captain of industry, a member of the Duke Board of Trustees, a graduate of Duke Law as a Richard Nixon Scholar in 1986. He worked for Mudge Rose, which I think was Richard Nixon's firm, right? And then went to China to establish the Shanghai Stock Exchange. He became vice chairman of the Bank of China International, the investment banking arm of the Bank of China, president and chief investment officer of the China Investment Corporation, the biggest sovereign wealth fund in the world at the time, I think. I mentioned co-founder of the China Stock Exchange Executive Council, and is a professor at numerous law schools, including Duke. It's a great pleasure to welcome you back again, Xiqing, and today we're going to talk about events that could not be more timely, which is the Chinese economy, its impact on the US economy and globally, and the various events that have created a significant degree of volatility in both of our markets, both the United States and the Chinese market. I put up just a rough agenda just to help structure the discussion a bit, but I've invited Xiqing to depart from that agenda wherever he wishes. And I've also asked, and he has agreed, that we allow time both for questions during the discussion, so we keep this informal, and at the end of any formal comments that Professor Gao chooses to make. And I will try to call out people or to find the people in the audience who would like to ask questions. So we'll look at current events. I would like to link this really to the global economy as a whole, because it's been a significant factor in decision-making in the United States. And there have been some episodes, including one as recently as yesterday, that is causing turmoil in the global markets. To speculate a little bit on what has created volatility, whether or not this is a moment in which we should all be extremely concerned that we could be at the edge of some kind of huge global instability. And then what are some of the consequences? And you'll see that I have a company there by the name of Glencore, which even like Anglo-American, among our biggest global companies, is really being roiled by the events that are taking place. So I thought the best way to start would be to ask you if you would talk a little bit about developments in China over the last month or so, and if it's appropriate at the right point, I might pull up a slide or two just to give you a visual of what's happening.
Okay, I'm very happy to be back here. Thank you to give me this opportunity to babble about China and the world. In fact, when we're all law students, but most of us who are here are probably also very interested in the economy and the financial world, because that's obvious that, at least in my time, most of the law students would try to go to Wall Street first. And then later I realized that Wall Street wasn't a very, very good idea, but too late now. The problem with the Wall Street type practice is that you see fluctuation all the time. The volatility is the name of the game. The problem here about when you talk about China and the United States, you're already looking at two very, very different sets of fluctuations. Because, in typical, let's say, I wouldn't say laissez-faire economy, because the U.S. was always sort of regarded as the strongest advocate of a laissez-faire economy, but it's no longer so, as you understand. The U.S. government now does more than any of the earlier governments, say 100 years ago, about the economy. Therefore, today, when you talk about capitalism, the capitalism today is no longer the same kind of capitalism as when capitalism was invented. But then people look at China and say, well, China seems to be a lot more capitalistic than the United States. In some ways, the two big countries in the world, the two biggest economies in the world, are probably similar in one thing, which is the difference between the rich and the poor, and the disgruntled, and the sort of polarization of all these issues. But you really, when you look at the reason, the rationale for the fluctuations, for the volatilities in the market, we're really looking at very different things. Because here, the fluctuation is caused by economic fundamentals, caused by cycles, caused by many different things. But very few people would really truly believe that the volatilities are caused by political issues. Sometimes, but occasionally it causes a little bit of a volatility. But overall, the economics has its own rationale and has its own rules. But in China, this is very different. And even though many people say China is a lot more capitalistic, but China is capitalistic in the true sense of the market itself. And we say, well, the Chinese government over the past 30 years really gradually started to allow the market to function its own way, gradually allow the rich people to get richer. The poor people are getting a little better now, at least compared to my days. That's why every time when people complain about the Chinese government's policy to allow the rich people to get richer, I said, look, the poor people are getting better now. And many people would find fault with me in that sort of statement. They say, well, you try to talk, from the government side. I said, no. I'm talking about my own personal experience. Because when I was a teenager, in those days, for whatever reason, Chairman Mao asked us to all go to the countryside, all go to work. And at the time, we believed that was because he believed that people need re-education by the workers, farmers, soldiers, because otherwise people get sort of carried away by wealth, by other things. People get elitist. Therefore, the poorer people never get the chance. But now today, many cynics say, no, that's not the reason. The reason was really because China had a major employment issue. Therefore, Chairman Mao wanted us all go to the countryside to solve that problem. I don't believe that. I still believe Chairman Mao had a good intention, but somehow it was carried too far. So when I was 16 and a half, I was sent to the mountains, built railroad for 3 years, and then I landed a good job to work as a bench worker in an artillery factory, making machine guns for the Vietnamese to fight Americans. And later, in a few years, we found when we got into a fight with the Vietnamese, we captured the cannons and rocket launchers. I found those were made by us. So this is very much like the Middle Eastern terrorists who are using American-made weaponry and using your techniques to fight against you guys. But that's the ultimate irony of the world. But at least in my days, I never, even in the law school 30 years ago, I never had this sort of a setup where you can get free lunch for a talk. We used to have some talks. It's brown lunch talk. Now you bring your own lunch. So today I said, oh, I'm amazed. The law school is getting so much richer now. But in those days, when I was working, the average level of living for the Chinese, anyone, is really not just for really poor peasants or poor workers. Just for me, I was from a medium-sized city, which had at the time had 8 million people. Today, probably the 15 million people. Xi'an, and in those days, food was rationed, meat was rationed, cooking oil was rationed, and everything from cooking soda to matches to soy sauce to salt to toilet paper, everything was rationed. So you have each family would have a sort of a coupon book of this thick, and every month you have to go somewhere and get registered, and then you get 2 matchboxes for the whole month, and you get a given amount of coal, you get a given amount of everything, and we get about 1 pound of meat each month. And in many months, they say, well, the government said, oh, we don't have enough meat, so half a pound. And then sometimes when it's Spring Festival, say, okay, now the government is really treating you well, they give you 2 pounds. 1 month, now I probably eat that much one day. So today, if you look at the absolute level of living conditions in China, it's so much better. It's not just in the cities; it's every place. Because I travel a lot, especially in poorer provinces, and you go there. Every time I go there, I look at it. It's much better. But how come people have a lot less satisfaction today, a lot less idealism, and a lot more complaints about it? So for me, I would say the economic problem in China can be a problem, but it's not the biggest problem. The biggest problem is political. The biggest problem is, is how people view the government functions for them. How people think that, if the government is, as we say, in the front gate of every government agency in China, it has this one big logo, 为人民服务, serve the people. But do they really serve the people? Do we know if they serve the people? That's the biggest issue. And if you look at all the policies that's being carried, look at the setup of the economy, and look at the so-called reform blueprint, are they really serving the people? Or are they really serving someone else? Or part of the people, small fraction of the people? So that, to me, is the biggest issue. And so when you look at the Chinese situation right now, especially within the past few months, when you look at the major volatility in the stock market, when you have the problem with the RMB exchange rate drop, all these things. From outside, people always look at the economic issue. They always look at the economic indices to decide whether this is something rational or not rational, or to try to predict what's going to happen. But for me, most of the time, I would say, well, those are the issues, but those are not the only issues. Comparatively, if you compare China with most countries you're familiar with, especially capitalistic countries, here or in Europe, it's, in every country you have one factor in your economic analysis as the government policy, but typically the weighted average, the weighted power you give to it is probably 2%, 5%. In some situations, 10%. But in China, it's probably 40%, 50%, and sometimes it becomes 80%. So that's the big difference. And that's something that most economic students, business trained students, do not see it immediately. So that's why I wanted to start this conversation with this thing to say, okay, yeah, there are problems in the Chinese economy, and the drop in the Chinese economy seems to be affecting the world economy in various ways. But for you to predict this, you should not only look at the economic cycles. It's not a cycle that typical students of economic history would understand over the history. You have to study the Chinese political cycles to see. As we used to joke, when I was in graduate school in China in 1978, I got this from a classmate of mine. Knows that I was the youngest in my class. Most students were 10 years older than me in that class. That's 1978 was the first year when China resumed graduate studies. And this one guy told me, look, the Chinese economic situation and political situation would go hand in hand, and that would go, and what's the best indices? It's the natural climate. When it gets to summer, when it gets warm, then the economy goes up. When it gets cold, the economy comes down. I said, why is that? He said, it's because when it gets warm, then food starts to come out, and people have enough to eat. And once you get enough to eat, then you start, when you get into the autumn, you get more food. Then people start to think about the revolution. And then, and now, with the past 30 years of reform, we finally have produced enough food for every Chinese, for all the workers, the migrant workers, all the the construction workers, the construction sites I visit all the time in Beijing, because I ride my bike all the time. Every time I pass through a construction site, I go there. If it's during lunchtime or breakfast time, I go there and check what they eat, and I ask them if they are satisfied. And 90% of the time they say, no, it's bad food. I said, what do you mean? Do you have enough to eat? I said, oh, who wants to eat that bad food? And we have only one meat dishes and the 3 vegetable dishes. I don't like it. I said, at least you have enough to eat. And that's the situation. But the situation is that when you have enough to eat, and you start to complain. So I think it's better for people not to have enough to eat sometimes. Then you know. But of course, the problem is distribution. If everyone has the same problem, you don't have that much of a problem. But if you see some people are having a lot more than you do, then you have a problem. And that is the situation in China right now. And that is probably our next goal. If you think forward for next 5 years, 10 years, if you look at economic situation, I would say, well, you look at the political situation first. Look at how the government is going to try to reform the state-owned enterprises. Look at how the government is going to try to reduce its own power in distributing resources, rather than grabbing more and more power. That's the issue.
And thank you. You raised an interesting comparative element about China that today's Financial Times carries a column by Gideon Rachman in which he makes the point that Americans tend to misunderstand China for many different reasons. One is the long view that you've been talking about, that the Americans have a very short view, and we're really thinking toward the next quarter at most, and we're founded on the notion of revolution. The whole Constitution and everything is an expression of revolution, whereas the long view is so much more prominent in China, and we misunderstand that if there's some sort of short-term volatility in China, that seems to us to be about to lead to disaster, whereas it is just part of the interim in the Chinese perspective. Is that accurate?
Well, it's a dichotomy there, because on the one hand, when you look at the Chinese way of looking at things, overall, we were taught, we were brainwashed to take a longer view on everything. So when your life is miserable, you say, oh, don't worry, eventually it's going to be better for you. If it's not better for you, it's going to be better for your children or for your grandchildren. So it's good for you to suffer now. But that's one part of the view. But of course, on the other hand, if you look at today's situation, and people are discontent. For what? When you say people here look at 3 months, 6 months, because typically, because I talk to economists all the chief economists of all the major companies in the world for the past 8-9 years, and every time when we talk about longer term, they say, no, we don't look at, economists don't look at anything beyond 6 months. Now, of course, he's talking about economists of these major investment banks or sovereign wealth funds. Why? Because they say beyond 6-12 months, it's unknown and it becomes very difficult. But But you have to look at longer term because, for sovereign wealth funds, for very large investors, when you have, hundreds of billions of dollars to invest, you can't just look at short term. Because if you do short term in the stock market, if you put a few billion, if you put a few $billion in the market, in most markets, you just immediately move the scale, then it becomes difficult. It becomes self-defeating. But at the same time, they will say, well, this is how everyone is trained. If you go to a business school, and if you talk to all the business people, they say, well, this is how the market functions. So you have to look at this. If it's longer term, now we don't worry about it because we take for granted that the governments are stable. If the governments are not stable, the economy is stable because the government, your economy is, the economy in Europe will be much more predictable because no matter what government comes in, the basic economic indices won't change that much. Of course, unless you finally get into something Joseph Stalin called the general crisis of capitalism, which he believed that at some point the capitalism can no longer solve its own problem, therefore it gets into a major issue. That's what happened in 1929. And then that, at the time they thought it was, capitalism was going to collapse. It didn't. But then 2008, this time again, the market dropped almost as much in one day as in 1929. And this time people thought, well, this time this whole, paradigm is going to change. The paradigm changed in regulations, in, financial markets in many ways, but capitalism hasn't collapsed. At the same time, you look at socialism. The Soviet Union started socialist experiment 1917, and 98 years now, but it already finished up after 70 years. And we, the Chinese, we started out in 1949, and now it's 60-some years, 66 years. We're hoping that we can live longer than the Soviet Union. And many people believe, I myself believe that we can do that. Why? Because we're not functioning as the Soviet Union was doing at the time. They were having a totally, enclosed economy. They have a very much of a anti-market economy where everything seemed to be planned, hopefully to be planned, and the command economy that's totally that run against the people's incentives. People's people basically are not incentivized to function, to work. But at the same time, if you look at the situation now, with the introduction of capitalism or the market economy into China, we have gotten all the bad things, the good things about capitalism, which greatly increased the productivity, and we started to produce more than enough food for people, and more than enough steel for everyone. China now has more steel producing productivity than anyone else in the world, and so for most of these old communists, we said, oh, this is a dream come true. Because in 1958, we thought we're trying to catch up with the United States and Great Britain, and we never did. But now, with capitalism, we did. The problem is, of course, now you produce the other side of the problem. You together with when Deng Xiaoping said, when you open a window and the flies and mosquitoes are coming in, don't worry about it. Now it's not just flies and mosquitoes. Now the wolves and tigers will come in. Now we have the big issue of the cleavage between the rich and the poor. So we said, well, why can't we change it back to make it somewhat better and make it midway between capitalism and socialism? That's what people believe they could do, but that's what's not happening. Why? Because by doing this, you have created a huge bureaucracy which would tend to protect its own interests. Now we have many interest groups in China now, people who are enriched by the whole system. So they want to have the benefit of both capitalism so that they can realize their gain, at the same time socialism so that they can have, I would say socialism, totalitarianism so that they can have the power to stop people from complaining about it. So if that doesn't change, then you know that what Vladimir Lenin and Joseph Stalin was predicting is going to happen, because then the tension is going to be stretched longer and longer. Eventually, at some point, it's going to break. And many people today are looking at it with great concern now. And many people are saying probably within really the foreseeable future, anywhere from 3 to 5, 10 years, there's going to be major problems if we don't solve the problem.
During your long career, you've helped create and observed the emergence of a very sophisticated financial system. How has that changed the outlook of the average Chinese person? I read about speculation and that, but I don't know how deep that goes into the population, and has it been for the good?
You know, I have this lawyer friend who taught me, gave me basic introduction of American law in 1978, 79 in Beijing. And he studied both, this is an American lawyer, but he studied Chinese, Japanese, Korean, every language possible. And he said he went to all these countries and stayed for a number of years. And he said he always wondered why, he never understood why socialism happened in China and not in Japan. He said Japanese are, by definition, socialistic, and the Chinese are, by definition, capitalistic. And I said, why is that? He said, just look at China. They don't like gambling. They don't like to take risks. And all these. He told me that at the time, which was just saying, I didn't quite understand what he was saying until much later. When I came to this country, over the years, I went to all the casinos in this country, not to gamble. The reason why I went to those places is because I was one of the very few Chinese in this country who had a car. I bought a car for $1,150 yuan. And every time there was a Chinese delegation, I said, where do you want to go for the weekend? I said, casino. They all wanted to see the casino. Those are all government officials, but they wanted to see it. So I took them to all these places. And then later, over the years, when I went to Europe, I went to all these places. I never gambled, but every time I go there, I just go around to look at the faces, just look at the composition of possibly Chinese, Asians, but more Chinese than anyone else as compared to other races. And sure enough, the composition of gamblers in all these places is such a telling fact. Everywhere you go, in this country, Chinese takes up less than 1% of population. Any casino you go, at least 10% Chinese, or in some cases, 50%. And once I was in Finland, I was Helsinki. I was commenting on on that country with another guy. We're in a conference. I said, I don't see any Asians here. He smiled. He said, you must have not been to one of the hotels. A long, strange name. I said, what's that? He said, there's a casino there. All the Chinese in Finland go there. So for Chinese, it's for some reason, I don't know why it's DNA or it's just our culture. We try to believe in Confucianism, but Confucius never gambled. But somehow the Chinese are just industrious enough and just love money enough so that they do all this sort of thing. So when I introduced capital market at the time, I came out with that idea basically because of my studies here, because I somehow mistakenly got into Wall Street practice. I look at it, I thought it was a great idea to try to make the economy work more efficiently. That's the reason I believe in it. But lo and behold, once you set it up, then very soon, within a very short period of time, the whole market becomes such a big thing for China. And I never dreamed of a market within only 20, we established two stock market in 1990. December of 1990, we had both Shanghai Stock Exchange and Shenzhen Stock Exchange, 25 years ago. Within 25 years, the market cap of the two stock exchanges now is among the top 2 or 3 stock exchanges in the world. If you talk about daily trading volume, very often it's number 1 in the world. It's churning. And the reason why it's not even bigger than this is because the regulators got so scared, and many years ago, when I was still there, we stopped this mechanism, which we call a T+0 settlement. So if you do a trade on the stock market, once you make the trade, then the money and the stock will change hands. In today's technology, instantly. That's what we call T+0, because T is the time when you do the trade. And so within 0 day, then you effectuate your trading, and you make money, and then you can do it again. But in most stock exchanges, people try to add a date on it. In this country, when I was here, it was T+3, and they were trying to push it to T+2 or T+1 because technology at the time didn't allow it. When I went to Europe in 1988, I went to every stock exchange in most European countries, and the average date at the time was T+15. Why? Because they didn't want people to. No, probably couldn't do it. Even if they could do it, they didn't want people to gamble. But today, you can really gamble if you do it T+0. So we stop it. Now, in all our Chinese stock exchanges, it's T+1. So you can do one trade, and then if you want to do it again, then you have to do it tomorrow. But if a few years ago, not a few years ago, some years ago in the mid-90s, when Shanghai Stock Exchange really wanted to jack up its trading volume, they, for a short period of time, they make it T+0, and then immediately, trading volume increased 4 times. And that of course, that's good for the stock exchange because they charge by the trades to get all the fees, and it was good for the regulators because regulators get a percentage of the fees from stock exchange, and then it gets it's good for the government because they get tax revenue, all that. But at the same time, if you look at the market itself, it constantly bleeds because the money goes up. These are all places where the money doesn't go back. So after a while, people realize that if you constantly do that, if the stock market doesn't produce enough profit, then eventually you have a problem. So now we have less of of incentive for people to do that much trade, but still, people just keep coming in. Recently, 2 months ago, there was a major stock market crash in China, and people all complained and said, the government did something that I consider as irrational, but most people in the stock market, these are what we call 股民, the small investors, believe that the government is right. They say, well, the government needs to interfere with the market to jack up the market price. But if the government can jack up the market price, the government can suppress the market price as well. Somehow, the small investors don't realize that. Somehow, people, we keep talking about investor education. I said, no, investors are not going to be educated unless they lose their money. That's my, when I was working at the CSRC, I used to have this debate with Laura Cha, who's a Hong Kong Chinese, and was a Hong Kong regulator, and was hired by Zhou Rongji, the then premier, to China, offered her the same salary as Hong Kong regulator. So she got $5.4 million, Hong Kong dollars, per year. As composed to us, we get, how much? I'm trying to think. Maybe 50,000 a year, or not dollars, yuan, a year, and then to what in his words, to introduce international standard. And she came in, and we were, we knew each other a long time ago, and we worked together. And she stressed on investor education. She said, "This is the most key issue." I said, how many years have you been trying to educate the investors in Hong Kong? She said, all these years. I said, are they educated? She said, well, they're getting better. But I say, they're getting better because they lost money. But if you don't lose money, you never get educated. Because I've been observing this for years and years, and people don't learn it. This is like what Warren Buffett says. It's always between greed and fear, and between those things, there's nothing in between. You move from one side to the other. It's just like that. People have very short memory in the stock market. So that's the issue.
Well, you've talked about efforts to suppress trading. Does this mean that nominally there is no high-frequency trading problem in China? Or is it, in effect, really going everywhere else through various instruments and trading off on other exchanges?
Well, as I said earlier, the Chinese regulators, first of all, are different from other regulators in one sense that they are very paternalistic, just the way our government functions over the past 2,000 years. And they have to approve everything. It's because all the markets in the world, except that in China or a few others, the Vietnamese market, all the markets are set up bottom up because you have market first, and eventually when it gets up and down, the government starts to regulate. But in China, it's totally different because we proposed to the government, and the government finally decided to do it. We did it top down. And it's like anything else, like in the typical legal law situation where we say that which is not allowed is prohibited. This is age-old rule in China until now. Until in the past few years, people started to say, okay, that which is not prohibited really should be allowed. But most Chinese regulators, most Chinese government agencies still sort of function in such a way that if I didn't say you can do it, you should not do it. So in the stock market, when you talk about high frequency trade, we never allowed it. So nobody could do it for the longest time until in the past few years when they finally decided, okay, maybe we should allow some of this. So they started allowing foreigners to come in. They allowed a few hedge funds to come in to function in that way. And then what happened? 2 months ago, when the stock market crashed, some people came out and said, this is an American conspiracy. Americans tried to topple up the market and get the money out of it. So the regulators, in order to cover up their own stupidity in making the market so bad, they went in and sent some major teams to all these major American European firms. This is Man. This is what's the other firm?
The high frequency trading.
Yeah, the hedge fund firms. They do high frequency within their the realm that the government approved, and then they said, okay, this is the regulators invented this term called vicious shorting. When you do short. You in the market, if you allow people to do both ways, you can long the market, you can short the market. And for the longest time, we never allowed shorting. But now you have the shorting mechanism. These people came in and they have the technology, so they immediately start shorting. But if you check on these firms, they do short and long at the same time. They do a lot of things in the same day to get a very small premium. But because of their frequency, then eventually they make money on it. They probably make a few percentage points, more than anyone else. But the overall amount of money allowed to get into China from foreign countries is limited. So when people say that, I said, that's nonsense, because if you look at the overall number, it's $30 billion. It's 30 billion yuan worth of thing. And the market at the time was 60 trillion yuan market cap. So with that much money, how can you jack up the market? How can you speculate in the market? It's not possible. But now, they're just claiming the cases are not resolved yet. No, that's Citadel and Man. Yeah, the one is from the U.S., one is from Europe. They just want to make example of them and say, okay, these are the bad people. We need to make example of them. We need to have a big fine on them to do it. So for this thing, I would say, for these are technically, capable people to do it. For most Chinese, they haven't started yet. Once they start doing it, you can imagine, within a short period of time, the market would really run out of hand.
Well, over 60% of our equity trading now in the US is high frequency. It's quite a staggering figure. Mm-hmm. The defense of it from them will be this substantially and in a healthy way adds to the liquidity of the markets. So that although there may be a sense of abuse by people who are not participating, we all benefit from the fact that there's such frequent trading.
Well, this again comes back to the overall propensity of the people, the investor there. First of all, in most developed markets, mature markets, the percentage of traders, the investors in the market, is a much higher percentage of the traders are institutional investors. So, the reason why you can have such a high percentage of high frequency trading, because they're technically capable. They have a lot of investment in it. For private citizens, for individuals, it's a lot more difficult to do that. And secondly, it's the propensity of the individuals. You can see in China, if the people just love to do that. And if you give them a smallest incentive, they just get in. But in most other countries, people, don't do it. And most people realize, even with one try, they go to the casino or they go to the market the same way. They look at it and say, well, looks like the odds is against me, so I'm not going to gamble there. But in China, somehow most people believe that they can win. They can win over the slot machine. So it's just a strange mentality.
John Coates has a lab that studies this at Oxford, and he would say it's DNA. Mm-hmm. That it is deeply inherent, and that there's 20% of Americans have the same kind of DNA. They're the non-Chinese who are at the casinos.
Right.
There are two other things that we read a lot about in the United States that I thought you might like to talk about. One is the scale of shadow finance, shadow banking. That we have a very big shadow banking industry, but it's apparently bigger in China to the extent that a couple of Chinese scholars have said to me, we're not even sure what it is and how big it is. And then the other thing that we see a lot about is the GDP numbers and whether or not there's a seasonal slowdown or taking the longer view. These are really just blips on an overall trend in China, because of course that does affect our decision-making in the United States.
Okay, for the shadow banking, I would say it's a price the government pays for its overreaching way of regulating. Because the Chinese government, as I said earlier, will try to regulate on everything, and it's very slow for them to approve anything. Therefore, all the products that's naturally developed in the market are not there, and they only allow a few products to function. Therefore, when the market needs liquidity, and it has to produce something, and then if the officially sanctioned system doesn't allow that, then they create their own thing. So from about 20 or 30 years ago, all the more developed areas in China, the Yangtze River Delta area, the Pearl River Delta area, these places gradually started, at first they started as a sort of what I would call a funding club. It's a hui in Chinese. They have all these private citizens getting together. They form some sort of a informal club and say, okay, let's just help each other. At first it was just a few million yuan here, a few million, and gradually it increased. By the time I was a regulator, in early this century, the number already ran up beyond the 100 million scale. Anyone could come up with that much money, and many of the investors would come in, talk to me, and say, "Look, you guys are not going to be able to stop the market because for any insider information, anything, just if the government institutions wants to function, it takes at least a few hours for them to get approval, and sometimes a few days. But for us, I can make a phone call, make a round of phone call in 10 minutes. I get over $1 billion overnight. Therefore, we're always going to be faster than you. And then I did some investigation in that regard, and I found it was true. This is what you would call typically as a shadow banking. At first, it was totally on the words of these people. It's in a smaller circle, no papers required, no contracts. It's all oral. And eventually, of course, as you can imagine, in the marketplace, eventually that would get into some sort of problem. And also when it starts to expand, then when you have more and more people, it has to get into sort of more formalistic way. But even that, in a formal way, it's still not in the official channel. For all the banks, because the Chinese banks are heavily regulated by the Banking Regulatory Commission and by the central bank. So the rates are always regulated, both the lending rate and the borrowing rate. But in the private citizen, clubs, their rates are decided by themselves. So there are always two different rates, and it's all known by people. People know, okay, the rate here, but the official rate right now, let's say lending rate, it's about 6-7% annually, and by the private citizen rate, right now, I'm not sure about now because I'm not following it, but it's probably about 36% annually. Depending, of course, now they get more sophisticated. So it depends on their, whether it's their prime client or it's, people with some questions. So there's such a huge gap. And both in this country and in China, there are usury laws. And if especially in 1949, when the communists took over, usury laws became the first things to get into the case and said, well, those are bad things. So whoever charges the usury rate would have to be arrested, and many of them get executed in the early 50s. So, people always thought it was a bad thing. But only about 2-3 months ago, the Supreme Court of China came up with this whole set of things explaining that this is what they call the explanation of the laws. And they said, since there's no formal laws about the contracts, they are going to say, okay, any lending rate that's below 24% annually is legal. This is the Supreme Court said. And any rate which is beyond 36% is illegal. And I look at it and say, what about those things in between? They didn't say anything. So I call up my judge friends in the Supreme Court. They say, well, that means we don't say it's illegal. And in our court, they are not going. The courts are not going to enforce it, but you can enforce it in private. By what? I said, the gangs or mafia. We don't really know. So it's a very interesting situation. So the court is actually recognizing this whole shadow banking system because the official banking would never allow a rate that high. So that's a very interesting part. That's very different from what's happening in this country, where everything is within the legal realm, but only outside of the regulators.
Right. Yes, indeed. And then the trends when it comes to production, importation, construction, and so on. Does it feel like things are changing in China in terms of slowing down, or is this a seasonal?
It's definitely slowing down. That we can see in many ways. If you look at all the numbers, because people sometimes always have this problem with the GDP numbers. They officially announce the numbers, but now people start to learn to look at other numbers. The power consumption. That you cannot cheat because power consumption is always there. It's all the aggregate number of all the meters. And then they look at the transportation numbers. The number of railway cars you use, the tonnage of transportation, all these things. If you look at these things, everything is coming down. So because of that, then it's an economic downturn. The interesting part is not the downturn itself, but whether or not it's within what the government tries to do with what they say they reform. Because over the years, we always know that the economy is going too fast. It's, economy cannot be sustainable with such a high speed. Especially after 2008, when the Chinese government all of a sudden inject 4 trillion yuan into the economy. That was about, in 2007, 2008 was about the best time for the Chinese government to try to instill into the whole reform process. They were already ordering all the economy to slow down and to make it more sort of self-sustainable and ecologically, rational development. But then, with the bad example given by U.S. government, which injected over $700 billion into the market, and our government somehow believed that it's our responsibility to help the world economy, to help the rich Americans. So they said, okay, let's put money in. So immediately they printed 4 trillion yuan into the market. And because I was in the whole financial system, with all the banks, with all the securities firms, we were trying so hard to tell everyone to be very careful with their lending, with their, to know their clients, to really function much more like a market-oriented institution rather than state-owned enterprise. And they were doing that. They're just starting to do that at a time when this happened. So the money all of a sudden got into every major bank, and the banks were under pressure to send the loans out. So they stopped looking at all the fundamentals of the companies and just freely give money out, like the time when it happened in 2006, 2007, 2008 in this country, where you have what you call the liar's mortgages and those things. So you basically these bank officers are just incentivized to give out loans without checking. And this is, of course, this is disastrous. And today, we're still suffering from that. And this time around, when the stock market crashed, the government said, okay, we're not going to do that anymore. We're going to be more careful. But look and behold. Now they do it a different way. They put money in all the securities firms, and they tell them to stop selling any of their shares, try to buy more on the downgoing market, and try to stabilize the stock index. That to me, I said, any government, most government in this world would do something when the stock market crashed. And when it goes down, it looks like a free fall, and people get nervous, and they want to stop the thing for a while so that people get more rationalized, and then they will come back and thinking in a more rational way. But the way you do it, there has to be some bottom line you can't go through. But this time, in our market, it just went through every possible bottom line. And in the words of a vice chairman of the CSRC, he told, it's like in a room like this, he called all the CEOs of major securities firms, brokerage houses. This is at first time 21 of them, second time 50. Got all of them in and said, look, you guys have made enough money on your own. Now, you need to support the party. You need to support the government. So, you're not allowed to sell, and you have to get together, try to stabilize the price. Someone said, sorry, if we do that, that's what if the regulators come to us later and said you collaborated and you cannot manipulate the market. This is against all these articles of the securities law. You know what this guy said? He said, don't worry about that. Let me worry about the law. The Constitution I may not be able to change. Any other law, we can't change it. This is the words of that guy. And then, of course, last month, this guy got arrested. Well, unfortunately, this guy got arrested for corruption charges, not for this. But I would have arrested this guy just for saying that. It's a blatant violation of the law. And if they can do that, then you can imagine, how the market can come back to a more rational level.
We have a few minutes. Anybody would like to ask questions? I'm sure you'd be willing to take questions. Right at the back. Yeah. No, you.
Okay.
Hi, Toshi.
Professor Gao, it's great to see you again here at the law school, and thank you for the free lunch here. So I have two questions in my mind. One is regarding the long run of the Chinese economy. You mentioned that there's this inevitable slowdown. So I was wondering whether the Chinese government right now have some substantial kind of reform ongoing. Are you aware of any of those reforms? And the other one's regarding the short run. The short run, we have just witnessed the great, stock market crash. It was a boom before that and crash afterwards. Is it fair to say that the entire thing was completely in the grips of the Chinese government? Was the Chinese government's policy contribute to the early boom of the market and then, eventually prevented the further free fall of the stock market? Can you just
okay? Well, for the first question, for the long run, I'm still, as in my typical words, moderately optimistic about the long-term prospects of Chinese economy, because there are many factors that will take us to that. Because first of all, if you look at the Chinese economy compared to, let's say, the U.S. economy or European economy, China has more state-owned enterprises, with it all the state-owned assets than anyone else. And so long as they can do a reform, a serious reform, and we have huge dividend to get from that. So we call it the reform dividend. And they say China is losing all its population dividend because the population is getting rapidly aging. But that can be easily offset by the reform itself. Two things the government can do, and the government promised to do 2 years ago by the 18th Party's Congress. One is the reduction of the government power in allocating resources. Secondly, to reform all the state-owned enterprises. And on each side, we've seen some small indications that they're doing something. But overall, I think the overall reform process is going on much more slowly than anticipated. And people are quite disappointed at that. And I would contribute that to all the resistance of the government agencies, all the SOEs, the state-owned enterprises, because they have so much vested interest there to protect. But with the Xi government gradually galvanizing with the support, with its power, I hope, and I'm sort of hopeful that they are going to be able to do that. So in the long run, we will do that. And also, at the same time, if you look at today we're talking about the number of cars in China. China now has fastly approaching the American way of having a big car in each family. And Beijing, when I went back to China 20-some years ago, Beijing had that year, 1988, had 100,000 cars. Today, almost 6 million. And it's the traffic jam is it's horrific any time in Beijing. But that's only one city in China. For all these years, over 50% of all private cars, increased cars, are in Beijing, Shanghai, a few cities. And most other places in China, there aren't so many cars. So even with that one thing, you can imagine, the economy still has the huge room to grow into. So those are the good points. But of course, there's a big if there. That's whether or not the government is going to be serious and is going to be able to effectuate its reform process. And you mentioned about the short run. I don't believe that the government is able to really do that much to finally decide on the market. The government has done a lot to interfere with the market, and the past few months of market turbulence was really very much caused by the government, I would say, because various parts of the government, especially the regulators, were telling everyone that they should go into the market because the market is not going to fall. This is only the beginning of a bull market. This is the chairman of the CSRC who came out, said only a few days before the fall, and said, look, believe me, the market is going to go for a long time. And that, of course, is bad for the market. But at the same time, as I always said, over the history, government has betted against the market many times in many countries. The government, in the long run, never wins in that regard. We can see that in many countries. I have many examples of that. This government, the United States, is probably the only government who's interfered with the market and won in 2008 somehow. But it has paid a hefty price and is going to pay price later as well. So I keep telling our government, I said, look, study the U.S. history and study the history of many markets. Your ability to do it is very small. Don't overestimate your own ability.
We've run out of time. Maybe we can take one question quickly. Elise, you?
Internet finance is thriving in China, and part of the money engaging that is high risky, and currently that the internet finance mainly relies on the non-bank payment institutions other than banks, but the release draft of the new regulation on non-bank payments clearly expressed the idea that the central bank is trying to reestablish the idea that the banks should be the intermediation, and that all the money in the market should eventually flow to the banks other than the non-bank institutions. What do you think of this policy? And because it seems really the opposite of the market now. Would that really work in the market? And also is that some kind of symbolize the current situation that the lack of control of the central bank, so they have to establish the bank as the intermediation for them to ensure it's more easy.
Okay, the question is, very briefly, is the internet finance. This is the term in China. You don't really see that in most countries, because in China it becomes a sort of catchword because all the internet companies are now running sort of a banking services. I think that happened in China simply because this is again a price paid by the government regulators, because the banking system was always too heavily regulated by the government, so that people just have the need to do certain things without any outlets. And the internet service people got in and found this niche, so they got in. And at the time, the regulators were too slow to regulate on that. And if they knew it early enough, in their hunch, they were going to kill it immediately. So every time when I was in the past year, every time I was in a conference together with the regulators, I always tried to compliment them, just put them up there in the spot. I said, I would propose hats off to these regulators because they didn't purposely regulate the internet finance. They were somewhat embarrassed by that, but the truth is that they didn't know how to do it. And because at the time, the central government, the government leaders were supporting internet technology. They were saying, okay, this is the only thing that China can possibly leapfrog. And so they did not come out immediately to kill it. But now they realize this is a big problem. This can be an issue bigger than anyone can think of. Because, in this country, because of the fact that the banking systems were so finely, so sophisticatedly regulated that anything that, with the help of internet, can only have incremental benefit or disadvantage on it. But in China, they're creating a whole different world. And think of Alibaba, Alipay, think about Tencent, how do you call it, Hongbao, the Alipay wallet, all these things. And instantly, they touch the lives of tens of millions of people. And that eventually can be the best recipe for any problem, as you can imagine. So now the regulators are waking up and they're saying, okay, we need to do something about it. And they're doing things. It's not going to be easy because now you have already created another monster, which has its own sort of vested interest there, which has its own support in the government. It'd be interesting to see how they're going to do it in the long run.
Well, I know you'll join me in thanking Professor Gao Xiqing.
Xiqing.
It's been a lot to